Hello and welcome everyone to Gold Asset of the Day for the 3rd of March 2021, presented by myself, Phil Carr, at the Gold and Silver Club. So as we transition into the middle of the week here, what do you need to be aware of? Well, firstly, as you mentioned on the week ahead commodity report, expect the potential for fresh capital to come into the markets at the beginning of the week. We certainly saw that on the very first trading day of March. We saw bounces across the board on many assets, from energies to indices to commodities. And with that, we saw a bounce higher, certainly on gold. In fact, on the first trading day of the month, we saw gold prices break out to $1,757 per ounce. We were quite quick in just taking some profits off the table there. Quick 630 points over two positions. Subsequently, we've seen this volatility re-enter the markets. Gold dipping back down, back towards the 1700s, providing yet again another opportunity to reload and stack further positions. Not only that, we've also been gifted an opportunity to add into silver as well on these dips. As I discussed with you last week, expect end of month profit taking at the end of February. The US dollar will pick up momentum to the upside, particularly getting sticky around that 90 level. Yesterday, we banked at the 91 level for the dollar, 186 points over two positions. Also then taking off the table 630 points profit on gold at the start of the week. And you really just want to keep treating the markets as a trader's market. Regularly bank profits, be nimble right now. Markets currently, they're not buy and hold. They're very much a trader's market. The day-to-day volatility where gold can go up and down 500 points in a day makes it perfect for trading, okay? This is absolutely the way that you want to capitalize right now. Keep coming in and out of the market. If all you've been doing over the last 8 months with gold is buying and holding, you're making no money. We've revisited the lows that we had back 8 months ago over June and July, tapping $1,707 per ounce, but it's a trader's market. Keep coming in and out of the market. Same with silver. Each time we drop down to $26 per ounce, it's a great level to look to re-establish positions. It's a very sticky level going all the way back to 2011 and 2012, providing some really good opportunities to keep coming in and out of that market. So right now, it is a trader's market. You want to be just keep coming in and out of these markets at the moment. Just make sure you keep locking in those profits daily, weekly, and keep bricklaying your trading account. That's exactly what you want to be doing at the moment. Now, in terms of major news items that we've got coming up over this week, the next major item to have on your radar is going to be Friday's non-farm payroll data. So far, the way it's played out over the last week and a half has been exactly as we expected, which was at the end of February to see capital flow out of many markets and propel the dollar higher as traders move into cash, taking their profit off the table at the end of the month, and then expect at the start of a new month, fresh capital to come into the market. So we've seen that with energies, with metals, and also with indices break out at the beginning of the week. Now, right now, we've also got a situation where the dollar is pulling back. It broke down from the 91 level, is back down to trading around 90.75 right now. So if we continue to see the dollar retrace lower here and 10-year yields also break down, this does set up for a further bounce higher on the metals. So I would certainly look out for that between now and the end of the week. If we see the dollar accelerate to the downside, treasury yields continue to break down, this is very likely going to provide that further bounce higher for the metals. On Tuesday, silver prices are up 1% on the day, and gold prices at the moment are up 0.6% on the day. They've rallied over 300 points off the lows that were put in at $1,707 per ounce. And also silver has bounced off $25.85 per ounce, already bounced up $1 to the upside. Great market to keep trading those ranges right now. The metals, that's the absolute optimal way to be approaching these markets at the moment. As you know, bull markets, they don't go up in a straight line. They're going to zigzag. So it's your job to keep capitalizing on these zigzag price actions, right? You want to make sure you keep banking on the breakouts and then reloading at the lows. It's really that bricklaying approach to the market. You just want to be nimble, keep locking in profits. As we mentioned many times before, don't get too greedy. Make sure you're just regularly banking profits. That will help you massively. And also at the moment, the sentiment in the precious metals, particularly the gold market, is dropped down to the lowest levels in 2 years. So what that means is right now, you've got many longer term traders throwing in the towel now with the metals, with gold, with silver, with the miners. They're giving up, right? the sentiment has dropped that low. So it's not a crowded trade at the moment to be taking advantage of this range-bound price action and eventual breakout, which we are anticipating as we continue to move through this super cycle. So just be aware that right now many traders are capitulating. They're panic selling right at the lows here. This is where you've been gifted potentially a big opportunity. If you stay cool, calm and collected and take advantage of the range-bound price action at the moment, you can do extremely well. This is where gimmicky indicators like a death cross, for example, you don't want to be trading like that. These outdated technical analysis strategies that have been taught years ago that don't work in today's market conditions. You need a lot more edge than that these days. In order to thrive in these current market conditions, you need to be trading the same way that the banks, the institutions, the hedge funds, the professionals do, using data, market intelligence, understanding capital flows. Great example of that is the latest week, the capital flows that we've seen go into the dollar at the end of the month, as many traders are squaring up and balancing their portfolios at month end. Then at the start of this week, a new month, 1st of March, fresh capital flows back into the market. Also, alongside that, marry that up with the daily, the weekly, the monthly, the quarterly, and the yearly cycles, and then further compound that with the intermarket correlations, the ratios in the market, understanding the key seasonal plays throughout the year, and further marry that up with key levels of liquidity, not just for entering trades, but also for banking your profits as well. Understand macroeconomics and the key drivers of commodities, and that will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to become a member of the Gold and Silver Club.